Welcome to the Bruges Real Estate Academy. In this video, we'll discuss the difference between real estate and other investments. The key difference between real estate and other investments such as the stock market, or bond market, or commodities is leverage. In real estate, you can buy a property for 65 to 80% of the appraised value using someone else's money, the banks, the owner of the property. So as a real estate investor, you can be highly leveraged. And what this means is you tie up very little of your own cash, which is important to an investor. So that's one of the advantages to real estate. And being highly leveraged, especially as we learned not too long ago, 2008, with the debt crisis, there's a lot of risk involved there. And that's going to be the focus of other videos, is how to manage your risk so you're investing smartly. But just be aware that there's a lot of leverage and there is some risk. Another advantage to real estate, another key advantage, is the tax deductions provided by the real estate. There's a couple of deductions. One is the mortgage interest reduction, and then the other one is it's really depreciation of the property. You can depreciate the property for over 20 years, and what this allows you to do is it allows you to offset your income if you have a large income. It also allows the investor, if it's an income producing property, to offset the income produced by the property. So what that means is, if, let's say, I buy a property that's worth $100,000, I'm able to depreciate that. I think now it's 22 years. I can depreciate that property over the life of 22 years. You know, if I make less than $5,000, if that property cash flows $3,000, I get to keep all that money because the depreciation covers, offsets the profits that I make from the property. So that's very important. And then the third thing, another key advantage from real estate, and specifically rental properties, is a fixed monthly income. All right, if you rent the property out on a year lease, and your lease is for $900 a month, then you're going to get $900. Well, you don't know, but you're pretty sure you're going to get $900 for the year that you rent the property. All right, what are the disadvantages to real estate? Well, real estate is active investing. Contrary to what a lot of late night gurus will tell you, real estate is a lot of work. You have to look at the property, you have to do a lot of research, and if you manage it yourself, you have to get it fixed when something breaks. So one of the disadvantages is it's not for the faint of heart. It's a lot of work. Another disadvantage is this: real estate is a long-term investment. Earlier in the video we talked about how the properties are highly leveraged. Well, typically those loans are over 15 to 30 years. What that means is that when you buy a rental property, you're gonna hold on to that property for a long period of time, for 20, 30 years, all while paying the mortgage. So it's a very long-term investment. You got to have a very long-term outlook on the property. Another disadvantage of real estate is that it's a highly illiquid market. Regardless of what your realtor tells you, or what appraisers will say, No one really knows the value of the property, until it's sold to another buyer. So, uh, you can get a good idea from comparable sales in the area, but to really zero in on that market price is, if anybody says they know exactly what it is, they're lying. They don't. You can get a pretty good ballpark. You can make pretty good estimates, but it's a highly illiquid market. And especially today with the way real estate prices have been falling, um, it's just difficult to determine, in a lot of in a lot of cases, what the true value uh, is of the property. And then the last thing is, there's a lot of dishonest people uh, in the real estate game, both realtors, um, lenders, so, and we'll talk more about this in other videos. There's a lot of people who are trying to separate you from your money. So hopefully in these series of videos, the education that you'll gain will keep the crooks from taking your money. All right, we talked about real estate. Now we're going to talk about the stock market, bonds, and other commodities. One of the key advantages to all these markets is that they're highly liquid. All right. Um, they you can look, you can go to Yahoo Finance, and you can look up Apple, and it'll tell you to the minute when the market's open what the stock price of that stock is worth. Same thing with bonds, and same thing with commodities. There's big boards, and there's ticker symbols, and you can look at the indices and see, for the bonds you can look at the yield curve, and for commodities you can see the spot prices. So it's highly liquid, and everybody knows what the price is during the trading day because it's broadcasted to everybody. That being said, because it's so liquid, that means there's a larger pool of people trading in a much smaller market. So it's highly competitive. Whereas in real estate, there's some big regional players, but really, you're not competing um, against like global investment funds like you are in the stock market or the bond market. You're competing in the real estate. There may be some big players, but you're not competing against Goldman Sachs or J.P. Morgan or big hedge funds or banks where there's armies of people from Harvard that sit there full time and watch the markets and analyze them. So in that sense, it's highly competitive, and that makes it much more difficult to make money in those markets. Not to say you can't do it, just it's just much more difficult, and that's not the focus of these these movies. If you're looking for that, you came to the wrong site. Another disadvantage to the stock market, bonds, and other trades is margin calls. Um, if you can be highly leveraged here too. You can sell stocks short. Uh, if you have a margin account, but if the balance exceeds a certain amount, then the bank calls you, or your brokerage calls you and says, hey, you got to come up with this cash now. um, it doesn't happen in real estate. I mean, if you do it right, everything should be budgeted, and you're not. I mean, that's not to say you can't be surprised, but in the stock market, bond market, other things, if you're margin called, then you got to come up with the money right now. It makes it very difficult. And then the last thing is, you know, all these markets, arguably the crooks are more sophisticated. I mean, if you look at the Senate testimony, Lloyd Blankfield in front of Senator Levin, he basically said he told his clients to buy CDOs while his own firm was trading against him. And he said he was providing liquidity to the market. So, um, in both arenas, there's a lot more dishonesty. In this arena, I would say that the dishonesty is more institutional. I mean, even if you watch CNBC, if you do the opposite of what they say, you're likely to make money. Um, so that's the difference between real estate and other investments. Hopefully, this video has been informative for you. Thank you.